Hello, and how are you? I hope that you are having a fantastic day. Today, we're going to talk about is $7,500 for Bitcoin a good buy or a terrible buy? Awful, just awful. Let's find out. I'm not a financial advisor. This is not financial advice. This is my opinion. I'm not smarter than you. You're smarter than you realize. Do not trust what I say. Do your own research. I'm going to give you the tools today to do lots of research. I'm going to skim across a whole bunch of different articles and different pieces of information, and then I'm going to leave the links so that if there's anything that I've said in here that you want to go a little bit deeper than what I presented in this video, you'll have the tools to be able to do that and to begin to do your own research, which is always really, really important when it comes to anything that you're going to invest money into. And with cryptocurrency, that's really the idea at this time, is to make it an investment that returns you a good or tremendous return. So now that's my opinion. That's the reason why I've recommended to my mom that she get involved in Bitcoin. I'm just sharing you my recommendation to my family so that you can hear what I've chosen to do. You can hear my opinion, and hopefully you'll get smarter and make a good decision for you and your family. Because the only reason to watch this video is to become smarter. And I hope that I'm providing you with useful tools to accomplish your own goals for your own investing purposes. So, is $7,500 for Bitcoin a good or a terrible buy? We're going to take a look at BAKKT. That's the cryptocurrency exchange that was built by the company that owns the New York Stock Exchange. You would think that they know what they're doing. We're going to look at the Grayscale Bitcoin Fund. We're going to look at several different endowment funds that are investing in cryptocurrency. We're going to take a look at what a state-backed German bank has to say about cryptocurrency. And then finally, we're going to finish up by looking at the stock-to-flow ratio as presented by Plan B. So let's get into this. BAKKT is a cryptocurrency exchange that's been started by the New York Stock Exchange, the company that owns it, the Intercontinental Exchange. They're also owned by Microsoft and Starbucks. The three companies created a joint venture, and they spent almost $500 billion, 4 years, a lot of sweat equity in order to create BAKKT, and BAKKT went live on September 24th. So this is the BAKKT website. They want to talk to you about unlocking the value of digital assets, which is interesting. The New York Stock Exchange giving you advice on unlocking the value of digital assets. Woohoo! And this is the current chart from BAKKT. It's gotten a slow start this evening as we're moving into the day, but the day is still young, and most institutional investors are not awake at this point. They're not online investing money because this is Sunday night on December 8th, 2019. And but the BAKKT exchange is already open. It's just that the investors are not up and about and doing their thing yet. So let's take a look at the volume as it's occurred on other weeks and months previously. So here's a zoom in on the chart I just showed you. This is the BAKKT volume bot, and he gives us a daily readout of the volume from the BAKKT exchange. And here's the key thing. This is the new all-time high for the BAKKT exchange. And you can see that as BAKKT dropped really close to $7,000 and then pumped up to about $7,500, all of a sudden the volume skyrocketed. So this is my opinion about what I'm reading on this chart, but when the institutions saw BAKKT almost hit this $7,000 figure, and then as it was climbing up from that, they had a fear of missing out and decided, okay, we're jumping on board. And they did it to a tune of $42.5 million, which was a new all-time high on the BAKKT exchange. Now, the reason why we want to look at BAKKT is because BAKKT is exclusively for institutions. Now you may say, well, Mark, why are you obsessed with institutions? What about retail investors? Well, let's compare the two. If you're a retail investor, maybe you have $100, maybe you have $5,000. If you're a big-time retail investor, maybe you have $50,000 or $200,000 that you're investing in cryptocurrency. But the bottom line is that most retail investors don't have millions of dollars that they're putting into cryptocurrency, whereas institutions are investing to the tune of, for Coinbase, they're investing $2 billion every month into cryptocurrency. And so the institutions are investing huge amounts of money. Now, if you as an institutional investor invest in a really bad idea that loses a significant amount of money, you could be at risk of losing your job, especially if you did something outside of the norm, like cryptocurrency. And so the only institutions that are going to be jumping on board at this time are institutions that have carefully done their research. Now, if you were going to invest $1 billion or $100 million, you're going to spend thousands doing research to make sure you made a good decision. So most institutions have taken more time and invested more money to make sure that what they do with cryptocurrency is actually going to pay off. And so they have a lot more information that they're dealing with before they ever pull the trigger to spend $42.5 million jumping on Bitcoin. And for them, the price that they chose to do it at was the $7,500 mark. And so what we learned here is that, yes, for the institutions that trade on the BAKKT exchange at this time, they decided that $7,500, especially as it looked like the price is on an upward trend, got them quite excited. They didn't want to miss out. They didn't want to lose out. And so they jumped in on board and suddenly opened up those purses to make a purchase. Now let's look at Grayscale. So who is Grayscale? Grayscale is this is their digital asset investment report for Q3 of 2019. And Grayscale has put together a whole bunch of different funds, and these funds are available through most stock brokerage firms. So if you have a TD Ameritrade, an E-Trade, a Charles Schwab, a TradeStation account, you can log in and you can buy the Grayscale Bitcoin Fund. You can buy the Grayscale Ethereum Fund. You can purchase a variety of cryptocurrency assets through the funds that Grayscale has set up. Now, even though retail traders can purchase these funds through their regular stock brokerage accounts, the majority of investment, to the tune of 84%, comes from institutional investors, and it's dominated by hedge funds. So there's a lot of hedge funds that are buying the Grayscale Bitcoin investments. And what are the hedge funds doing? Well, we can see that from this chart down here. So, actions speak louder than words, especially when those actions are mixed with spending money or purchasing an investment. And in this particular case, the Grayscale Fund had a record quarter in the third quarter 2019. You can see that this quarter was more than double most quarters of Grayscale's business, to the tune of $250 million for that quarter. And in the third quarter of 2019, see how this bar is a dark color? That color matches the Bitcoin color. So 75%, and I'm guessing at the percentage, but that looks to me like this bar is about 75% of the total. Approximately 75% of the investment went into Bitcoin, and most of this money, 84% of this money, comes from institutions, including a lot of hedge funds. As hedge funds managers will tell you they do a lot of research before they pull the trigger and make a decision to make a significant investment, especially in something that is so outside of the norm as cryptocurrency. And so they're going to be speculative, they're going to be conservative, they're going to be very careful. Nobody wants to lose their job over making a bad decision. And so even though this is a huge spike in investment, this is a conservative move in their minds. They've made a good decision. They've researched it out. And the results of their research gave them enough evidence that they felt comfortable making this choice to make this kind of an investment. And especially where they're talking about doing almost double the business, or in the ballpark of double their normal business in a single quarter. And so, this is obviously the best quarter ever for Grayscale Bitcoin investments, or any of the other cryptocurrencies that they trade in. You can see here that Ethereum came in second. It's probably a good 20%, 24%, 22%, something in that ballpark. And so this is telling me that right now is actually an excellent time to be investing in Bitcoin. And so I think that this is quite interesting information. Now let's take a look at endowment funds. 94% of surveyed endowment funds are allocating to crypto investments according to this survey. So who did this survey actually speak to? Well, they spoke to Yale and Harvard, as well as Stanford, Dartmouth, Massachusetts Institute of Technology, and the University of North Carolina. In fact, they spoke to over 150 different endowment funds. But when you talk to Harvard, Harvard has $39.2 billion endowment that they're investing in different investments. And Harvard has made a significant investment into cryptocurrency. They've been doing it for quite a while. And when we look closer at this research study, this is the actual report that was generated from this survey. We learned that 94% of endowments, and that's out of 150 different endowments, which included Yale and Harvard, Stanford, etc., 94% have taken part in crypto-related investment initiatives in the past 12 months. And this was done at the end of 2018. And so we know that 94% of these endowment funds were getting into cryptocurrency in 2018. And so then they ask, well, what about 2019? 94% believe the endowment sector's allocation to crypto-related investments will either increase or stay the same. Well, what percent do they think will actually drop? Only 7% believe their allocation will drop during 2019. And so a lot of these guys are expecting to see their investments in cryptocurrency stay the same or increase. And here's another interesting part. 54% of the investments were direct. They purchased the cryptocurrency directly, and only 46% were invested through a fund similar to the Grayscale Bitcoin Fund that we just looked at. Pretty spectacular. Endowments are getting into Bitcoin and cryptocurrency at a rapid pace. So that's pretty spectacular news. Now let's take a look at state-banked German bank says Bitcoin will leap to 90,000 in 2020. Now, if you knew that with great deal of confidence that Bitcoin was going to go from 7,000 to 90,000 and it's going to happen in the next year, that would indicate that that's a pretty darn good investment. And I find that this is a prediction or an expectation that's coming out of a state-backed German bank, and 90,000 is a huge, huge leap. On October 1st, the Munich-based state-owned bank published its latest research report that seems to suggest that the forthcoming Bitcoin halving, which is going to happen in May of 2020, is yet to be factored into its current price of around $8,300. Today, the price is $7,500. So they talk about the stock to flow ratio of a commodity such as gold as the amount of the asset that is held in reserves divided by the amount of the asset produced annually. So let me say that in a different way. If you were a gold miner, we have a pretty good idea of how much gold you're going to mine every year. And they look at the amount of gold that miners are going to mine, and they call that the flow. The stock is the amount of gold that already exists in the world. So we go to Fort Knox, we go to the jewelry stores, we calculate how much jewelry people own that all contains gold. All of that accumulated together is what's considered the stock. So the stock to flow ratio is the amount of existing gold compared to the amount of new gold that's getting mined. And the stock to flow ratio tells us how scarce something is. How difficult is it to find more of it? And gold is very, very scarce. Well, Bitcoin, if the May 2020 stock to flow ratio for Bitcoin is favored into the model, a vertiginous price of around $90,000 emerges. This would imply that the forthcoming halving effect has hardly been priced into the current price of $8,000. Let me say this in a different way. When we look at the amount of Bitcoin that exists today as compared to how much will be mined in the next 12 months, this German bank says based on the scarcity of Bitcoin, Bitcoin should have a price in 2020 of $90,000. Whereas the current price is only $8,000. So this particular German bank anticipates that the price of Bitcoin will increase by 10 times over the next 12 months. That's a 10x increase in the next 12 months. Given the price is now at $7,500, it's actually more than 10x. So that is a pretty spectacular price increase. There's another company that likes to use a stock to flow ratio, and that's Plan B. In fact, when it comes to cryptocurrency, Plan B is kind of the grandfather organization that's been using the stock to flow ratio. And Plan B's expectation, so I'm going to include this article, and it goes into detail about how Plan B is modeling the Bitcoin's value based off of Bitcoin's scarcity. But the article I wanted to share with you about Plan B is they expect that Bitcoin's price will be $100,000 in 2021. Now, with all of the institutional investing that we saw in those previous slides, based on the fact that this state bank of Germany was talking about stock to flow ratio, it's pretty clear that they're considering, and this is just my guess, it's my personal opinion, I have no factual basis for what I'm about to say, but it looks like they're basing some of their decisions that institutions, endowment funds, etc., are basing some of those decisions on stock to flow ratios and stock to flow analysis. And so I'm guessing, but that seems to make sense. Maybe someday we'll know if that was an accurate statement, but at the moment it's just I want to call it an educated guess, but it may prove to be not very educated. Time will tell. Anyway, the creator of one of the most historically accurate Bitcoin price prediction models, because Plan B has been around for quite a while now, and they have been extremely accurate at predicting the future price of Bitcoin, especially over the last recent years as Bitcoin hit $20,000 in December of 2017. And they say that they're confident that Bitcoin is going to hit $100,000 by 2021. Now, do I really care if Plan B is correct or if the German state bank is correct? To be honest with you, I would prefer the German state bank to be correct. I'd like to see it hit 90,000 in 12 months rather than 100,000 in 24 months. but either price point would be a price point I would love to see. So, in conclusion, how can I be of service to you? Do you have any questions from what I said tonight? I've covered a lot of material. I'm going to give you a whole bunch of links so that you can dig a lot deeper into this. And if you run across something that leaves you scratching your head, hey, please leave a comment on our YouTube channel and we'll do our best to give you good information. In the meantime, I hope that you'll like, subscribe, and hodl. Do me a favor and have a fantastic day.